If you're a business owner and you are looking for some help to make things a little bit easier, perhaps increase your profits, make sales, improve your business, improve your life, then hopefully this will help you. It's part of a little series of videos that I've put together that covers this topic, which I'm calling the triangle of truth. It's made up of three component parts. There's a bookkeeping and accounting system. I know, terribly boring, but a bookkeeping and accounting system that's really important. A target and forecast system, which this video is about, and also your actions and your KPIs. In other words, if we understand more about our past and the decisions that we made that got us the results from the past, we can utilize those decisions to help predict the future, predict our future, and that will give us some certainty. And if we've got certainty, when we get up in the morning and we've got some certainty and we know kind of which direction we're going, we're going to deal with the present. We're going to deal with the things that we've got to do, the actions we've got to do today. And if we know that we've got to achieve something today, this week, this month, and we're a bit more focused about that one thing we're going to achieve, guess what? It lifts our energy. So we get that certainty. That certainty gives us a commitment to do something. And then when we do it, the information ends back into our system and that starts to build confidence. And so the confidence and the certainty and the commitment all go together. Previous video, I talked about accounting and bookkeeping and how important that is to understand as a business owner. You can outsource the entirety of that system, but you can't outsource the responsibility. You have to be at step 5, understand what that means to you and your business. Go watch that video. But step 5 is going to lead you into the budgeting and forecasting, which is what I want to talk to you about today. The reason I want to help you with that today is because the vast majority of business owners do not run a budget and forecast. I can honestly tell you as well, there's an awful lot of big businesses out there who don't run a budget and forecast. It's amazing how many people don't do that. And my conclusion after 35 years of helping business owners from an accounting perspective and from a coaching and mentoring perspective is that there is a reason that people don't run their budgets and forecasts. And that is because when they do, they see the truth. Hence the triangle of truth. Okay? If business isn't as good as you hoped it would have been at this point in time, in other words, your backstory is, well, I thought I was going to do £1 million worth of sales. I've only done 500,000. You know that you're not on track for your target that might be in your head, whatever that target might be, or that lifestyle that you want. The picture of the nice car and the big home and the holidays are on the walls somewhere in the back of your mind, but they're slowly fading, collecting dust, because the reality is running a business is hard. It's bloody hard. And you get up every day and you fight your corner and you do what you can. And as business owners, we often forget that there is a world out there we can turn to for help and support. And so we just do it on our own without referring to a group of people that can help us, or a mastermind group, or a coach, or a mentor. That's what we do as a business to help people realize that actually you're okay. You can get this stuff aligned and you can achieve your goals if we get our focus on the 3 important ingredients, so that we can actually not feel like we've been told the truth and we don't want to hear it, but actually know the truth, to go, look, I know what my results were for the last 12, 24, 36 months, and everything that I did to get those results has worked, and in some cases hasn't, but I know why. And I'm going to take that knowledge and information and I'm going to plan my future. I'm going to work out what I'm going to do next based on what I've already done. And that will then dictate the actions that I'm going to do. Now, when we come to putting a budget and a forecast together, if I put my accounting hat on, I've been an accountant for 35 years, and I've been at the coalface trying to do some of this stuff. I could go to my accounting system, my software, and go and use the forecasting tools in there. And that's okay. They work to a certain degree, and they're very good at just collecting that data as a bit of a benchmark. Or I could go and get myself some proper budgeting software, especially some of the cloud-based stuff that's out at the moment. Some really good software where we can forecast for the future. We can bring in group. If we've got more than one company, we can do micro forecasts, we can do goal setting, we can do some really clever stuff with the forecasting stuff. And the cloud-based stuff is really great because you can be collaborative with other people. However, okay, I know how to do this stuff, and boy, it makes my brain hurt trying to get that to work, to do all that. But here's the problem. If I was to come into your business and do your budget and forecast, which I can, what will happen is when I finish that work, which will probably take several days, if not several weeks, to get to a really decent result, assuming that you've got good bookkeeping records to start with, I will know more about your business and the prospects and the opportunities in your business than maybe you will. Because in doing the forecast, and this is the important thing, in trying to figure out what your targets are and where you're heading, and doing it by looking back at the past results, you should really get a real sense and understanding of what it takes to achieve those results. In doing so, the process of doing the forecast, the process of setting your targets, the process of understanding the connection between the future and the past, the actual process is more valuable than the actual result in the end. And so I've concluded over the years of doing this is that unless you want me to come in and help you run a budget and forecast, and I charge an awful lot of money for that because it's an awful lot of work to do it properly, I'd rather you did it yourself, and I'd rather I taught you to do it. It's a much better proposition because if I can teach you how to do it, you can do it yourself, and then you can do it again and again and again and again. Now, if you want to share those results with me because you've put it together, I can really have a proper conversation because of where the coaching and mentoring comes into, because now I can see this is what you did, this is what you're going to do. Now I can ask you different questions, and I can work with you to work out how we actually achieve those goals, because that's all that matters. Okay, you can set a target of £1 million. I don't really care how you get there. Let's just get it, because if that £1 million means you get a certain lifestyle and you have a happy existence with your family and your friends, brilliant. That's what it's all about. So what does the target look like? Well, ultimately, we want to actually just nail it to a sales target, but not just a sales target, because really we want a profit target. Now, you might not share your profit target with your team, with your colleagues, but what we want to know is we want to know what our sales target is, because the difference is our cost. And from these sales and costs figures, obviously we can calculate our profit. And in your costs, you may have specific component parts. Wages might be a big thing as part of what you're doing. Cost of sales might be a big thing. You might buy in materials to sell on or manufacture. And you might have wages and cost of sales. And you'll have some form of overhead to get to your profit. Now, the first thing we need to understand is, what do we mean by profit? Because if you were to go to your bookkeeping and accounting system and go speak to your accountant, they would give you a set of statutory accounts that have gone off to the inland revenue, sole trade partnership, limited company, whatever. And you'll look at the profit, they go, oh, I don't understand that. And again, this is what I've seen over the years talking to clients who come to me and go, I don't know, my accountant's been doing my accounts the last 5 years, and I don't understand any of it. Great. Good question. You don't understand it. Let's help you understand that. Let's help you understand and interpret what all that stuff means. Because the profit figure your accountant is working with, he's working with it for the authorities, and he's going to do everything, he or she, they are going to do everything they possibly can within their rules and regulations and professionalism to present that in such a way that you benefit by paying the minimum amount of tax that the system allows you to pay. And therefore, the way that the accounting industry presents itself is often governed by company law or statutory requirement that says, this is how the report should look like. And you look at the bottom and you go, oh, I don't really understand that. Because that profit figure might have an element of you in it. It might have, and this might be included either in wages or in overheads, but it might have a notional salary for you and your family members in there. You and your wife maybe have got your salary in there, but it might be a small salary of 10, 12, 15,000 pound a year or something like that, whatever the figure is. It's just a notional salary. But you might also have dividends. Okay. You might also have included in overheads a couple of other things that you know that are in part of the business, but They're there because you run your business in a certain way, and therefore that makes life work for you. But they'll be relevant to you. And so what we need is the profit before paying you. The real profit, the truth. What's the real profit? Okay, your profit, the number you're chasing. It's not what we're going to tell the revenue or give to the authorities. It's just taking the same data that they're using for the authorities and just creating your own report and saying, look, my sales or my cost of sales is this, and my stock adjustments and my overheads is this, and this is my profit figure before paying me. And if I make that figure, I can then live my life accordingly to match. Because that's the critical number that affects you and your lifestyle. All right. So if sales drop and you make no adjustment in your costs, the likelihood profit's going to drop. The only thing that's going to happen as night follows day is you will take less money out of the business. And therefore, that holiday, that night out, that steak for dinner, or whatever you want to spend your money on has a knock-on effect. Now, what you also might find is that out of that profit, you might be investing in your business. Now, investment comes in two ways. Investment as in, I'm going to invest in advance. I'm going to save some cash and I'm going to put it in a bank account because in 3 months' time, I'm going to invest in some new equipment, some new tools, some computers, machinery, etc. Or I'm going to take that money and I'm going to invest in some stock and some labor and I'm going to create something new. You're going to invest back into the business to create something for the future. Alternatively, you wake up one morning, the van's broken and it's too expensive to repair. So you decide, I'm going to buy a new van and I'm going to borrow the money to buy the new equipment or the tools or whatever. And so you've got borrowings. So you're either going to have a cash pot, okay, a pot of money, or you're going to have a debt that you're going to incur to buy the thing. There's no right nor wrong in terms of the conversation we're having here, but recognizing that we've got to do that. If you've got tools and equipment that you need for your business, at some point they're going to need replacing. They'll just wear out. Something's going to develop. If you've got an office with staff involved and you want to grow your business, at some point you might have to change offices or develop the office to create more space for more people, or the infrastructure, the technology, the computer system, the databases, the whatever. Something will have to develop as well to support the growth in your business. These are just conversations that will come out when you start putting a forecast together. So understanding what profit means to you is critical, because at that point then you can say to yourself, right, I know what my profit is. My profit is this figure. I need X number of pounds per year to feed my family and do all the things that I want to do. Great. And have some left over to invest back in the business and pay my taxes. Right? Because you're going to make a profit, you're going to pay some taxes, and you're going to invest back into the business. From that, I can then work out what my costs are, because actually they're known. I've got a certain element of costs, and therefore my sales has to be that figure. And quite often, I'll actually turn this whole thing upside down, and I go, what is the profit you want to do? What is the costs that are involved to do that? Therefore, the net result has to be this sales target that we've got to do. But we've got to get that sales target. How to get from there. A little conversation on tax went through my mind as here. I would say over the years that I've been doing accountancy work, coaching and mentoring, I'm talking 35 years of this, speaking to hundreds, if not thousands of small business owners. The most common approach that people get with me is that they want to work out how they can save tax. Most accountants up and down the country will have their clients saying, can I save tax? Or they'll be having the conversation, I've saved you some tax. And I want to address this because it is absolutely critical that you have somebody in your camp doing everything possible to save tax. Because quite often your tax bill is quite a significant bill that you have to pay once a year or twice a year or whenever you pay it. Okay? It's quite a significant bill. And if you can save 10% of your tax bill, 20% of your tax bill, that's real cash in your pocket. That's good. But we can only save tax using the right mechanism and the right structure as laid down by government and law. Okay? So we can't fudge it. We've got to structure it properly. But really the question you should be asking is, how can I pay more tax? How can I double my tax bill, treble my tax bill, quadruple my tax bill. Because you might have had a tax bill of £10,000, £20,000 in the last year. What if it was 200,000? What if it was 2 million? Okay? It's scary because you don't normally think about that. You normally think about reducing taxes. But if you're constantly thinking about reducing your taxes and getting them as low as possible, then by default, you're actually saying to yourself, I'm going to reduce my profit. And psychologically, what happens is you actually reduce your sales. And one of the things that's happened over the years is that the VAT threshold in the UK has been sort of stagnant at £80,000, £90,000. But the cost of living and the value of things have crept up. And I know that there's an awful lot of businesses that are keeping an eye on their sales because they don't want to be VAT registered at that level. And therefore will deliberately keep their sales below the threshold to stay out of being registered for VAT. But it means that they're also keeping their profit down because they also don't want to pay any more tax. And so you have this mindset that if you drew it on a graph, put up over here on the graph, if you drew it on a graph, is that they're keeping sales and profits the same, but inflation is creeping up. And actually, here you were okay, but 5-10 years down the line, you feel poor. But you've kept things the same. You haven't, because you're not really measuring inflation. Because it creeps up on us bit by bit. The cost of fuel in your motor car has changed over the last 10 years. The cost of groceries has changed over. You don't necessarily see it all the time, but it creeps up. And it's this creep that we're all easily fooled by because of the way the governments come at us and the way the marketing comes at us. And I say, when you sit here looking at your forecast, look back over the last however many years you've got of trading and say to yourself, what was my profit? If you've got 5 years, look over the last 5 years. And if your profit trend was a little bit flat line, question yourself, is it flat line because I intended it to, and actually I'm earning the same money today, but 5 years ago I was working 7 days a week, now I'm working 2 days a week and I'm earning the same money. That's a hidden profit. But if you're still working as hard as you are today as you were 5 years ago, maybe even harder, and so therefore there's another hidden drop-off, is that the amount of work and effort you're putting in, okay, has actually gone up, which means that the pound for hour combination, the gap between what you're making per hour and the money you're making per hour, is actually going down even further, plus the level of inflation. You're actually going backwards. But if you're able to look at those figures over the last couple of years and see a trend, ask yourself the question, is that trend real, or is that trend hidden and eroded by inflation and poor time management and bad judgment? Okay. So if you draw a line today, and I don't know whatever day you're watching this, but if you draw a line today and you said, okay, I'm going to take all my data up to the end of last month, I'm going to go back into my accounting system and I'm going to look at all my profit and loss for the last however long you want to go back for, and I'm going to pull out my sales and my costs and my real profit before paying me, before paying taxes and before paying investments into my overheads. I'm going to look at my real profit, and I'm going to put that on a little graph, and I'm going to plot that. And if that graph is staying flat lined, you've got a problem. If it's going down, you've got a problem. Now if it's going up, brilliant. Is it going up enough? Is it going up with expectations? Is it going up to the level you should be? Okay, the longer the period, the easier it is. If 10 years ago you were making X number of pounds, just with an inflationary calculation on a calculator, you can get it to, it's got to be here to be the same from inflation. Well, if it's more than that, brilliant, you're making progress. But it's an understanding of that figure, okay, so that we can take the past data and say to ourselves, well, if that's the things that I've done over the last 1, 2, 3, 5 years, and I keep doing the same thing, in other words, we'll cover this in the video of KPIs and habits, but if I keep doing the same actions, the same activities every single day, going about the same way that I get sales and delivering my work and looking after my team and dealing with the expenses of it, if I keep doing the same thing, then we can probably predict with reasonable accuracy that you'll end up with the same sort of result in the next 2, 3, 5 years. Now, the problem is that your results might stay the same for the next 5 years, but inflation could even away, even if inflation changes or whatever. The fact is you probably find you've got a bit of a gap where you're heading down and everything else is heading up, even if not quite realizing it. And clues of how that happens is the way we change our thinking. We might think in our 20s, or we'll buy a new vehicle or a new truck or new computers and new things for the office, and everything's all shiny and new, and we spend out money. We might borrow money to pay for those things. And then, when you're 40s and your 50s, I'll just make do with the old car, and that computer is, no, it's 10 years old, but I'll stick another sticky patch on it and we'll just keep it going, because I don't really have the money to buy a new one. Well, that's an indication that things have changed. Now, in amongst all that, of course, life has changed. You may have been young, free and single in your 20s, and now you're married with 14 kids. So your need for money and your cost of living has changed dramatically. Well, great. So it's even more important that we get these targets so that your cost of living actually matches the business activity. Here's the challenge, of course, is that when you know what your targets are, and if you work from the bottom up and you go, okay, I'm going to really look at my profits and I'm going to understand my costs, I'm going to set myself a sales target, you might figure, and it doesn't really matter what number. I was talking to somebody only last week and they set their sales target, and we calculated that their sales target needed to be 25 million after tax over the next 10 years. So probably 35 million, maybe 40 million is the sort of sales number that he's got to achieve. And when we look at what he's achieving now, a fraction of that. So the gap between where he is now with his sales and where he wants to be with his sales is a big old gap. Now, can we do that? Well, now that we understand that figure, we can start breaking it down into the component parts of people he needs to sell to and products and services that he needs to sell to achieve that goal. And that's what we need to achieve here. So whatever number you pick here as your sales target, hopefully calculated from your profitability, you might look at it and are now facing the truth. And you look at it and go, that's a big number. I don't believe I can do that. Because everything you've done in the past has got you to where you are and you want to be here, and there's a gap. And that could be simply that the gap is how we arrive at that number. It could be as nothing more complicated than your pricing structure is wrong. You're selling your thing for £3,000, but in order to achieve that number, you need to sell it for £30,000. That's a thinking problem. That's a marketing problem. Could you sell your 3,000 thing for £30,000? Yeah, if you attacked it from a marketing perspective and you attacked it from a completely different belief level, you can turn a £3,000 product into a £30,000 product. That's certainly possible. We've done that with some of our clients. Changed what they sell, changed their perception of what they sell, changed the thing that they sell, so it becomes a better, more viable product. Now, in doing so, it changes the audience. These customers over here will only pay £3,000 for the thing, but these customers over here will spend £30,000 on the thing. And you've only got to stop for a minute and look out into the big wide world and see where people are spending their money. Go to the yacht shows, the boat shows, go to the shows where they're selling private jets, go to the luxury homes, go and have a look at some of these places and you'll go, oh, somebody's actually spending, 10 million on a boat. What? Yeah, there are people out there spending it. So those customers might spend money with the thing that you're spending, because they're not buying the thing based on its value. They're buying the thing based on the benefit that provides them that. Maybe the time savings or whatever. I don't know what your business is, but all I'm saying is we've got to look at the numbers that we're doing here. And we've got to say, in order for me to hit that number, I want to break this down now into a number of people that I've got to sell it to, a number of widgets or things or services or boxes they have to buy. And that will equal, so it's just a number of boxes and a number of people, number of sales to hit my target. And we start breaking that down. And once we know that, it's then a case of saying, well, if I know that I need to sell 100 of these things at this price to get to this number, the next question is, well, where do you get the 100 from? Well, you look back at your old data and you say, well, I regularly sell 10 of those. And to sell 10, I do this, and that seems to work quite well. Okay, you now want to sell 100, exactly the same as what you've already been doing. Let's see if we just do more of the thing that you do to get the sales. It might be that you run particular adverts in particular magazines and it works, or run adverts online and it works. Great, run more adverts in more magazines, in more locations, in more places. Get more eyeballs on your thing. Oh, but my advertising costs will go up. Yeah, of course, we're going to spend more money. And it might be in the short term, you get less profit. But this is where we put our forecast together to go, I'm prepared as a business owner to sacrifice some profit today for more profit tomorrow if I'm certain that this is going to be work. And that, of course, is where the challenge comes. Spend money on marketing, you spend money on investing into your business. No guarantee it's going to work. That's entrepreneurship for you. There is no guarantee. But we can bring in some certainty with what we're doing by looking at our past results and mapping it out for the future to get ourselves to a point where we've got a sales target. Now, would you use a piece of software for this? Would you use a spreadsheet for this? How would you do this? It's going to depend on how you operate and how you think. And I genuinely mean this when I say this. I don't care how you do it, because most people don't. If I came along to you and said, here's a piece of software, sign up to this software, it's 30 quid a month, you can run your budget and forecast, I'll show you how to use it, I guarantee you'll come back in 6 months' time, you won't have touched it. But if I said to you, how do you operate? Do you like working with a whiteboard? Do you like working with pieces of paper? Do you like brainstorming? Go get yourself some coloured pens, go and write on things. Be creative around your thing. Get big you get these big post-it notes that you can put up on the wall. Fantastic. Tear them off, stick them up on the wall, get your team involved. Write on the windows. These are great for writing on windows. You wipe it off after. But just get your thinking going. Sorry, I just tapped my microphone there. Get your thinking going into what possibilities could happen going forward. Now, if you've got somebody in your team that can capture some of the data and do some analysis and create some reports, then go for it. Let's have a profit and loss, and if you can really get to it, a balance sheet for the future. Let's also have a cash flow. Okay, let's have a cash flow forecast. So our profit and loss dictates our profit, our balance sheet checks in and makes sure that it looks okay, and our cash flow. Guess what? These are coming from your bookkeeping system. They're the reports you're running anyway, you've got them. But if you can do your profit and loss and budget and cash flow, then we can get to a very simple report, and that is, what's your target? And if I was having a conversation with you, I'd go, okay, what's your sales target? What's your profit target for the next 12 months? And you might give me a number. Now, most people don't give me a number, but if you give me a number, you say, well, I want to achieve this sales. Great, what profit's going to do? It's going to give me this. Great, what's it for this next quarter? In the next 90 days, what are you going to achieve? Do you know that's your target? Then the next question is, what are you going to do in the next 90 days to achieve that? Oh, I need to do this. I need to, great. So in which case, if you know what you're going to achieve in the next 90 days, what are you going to achieve in the next 30 days? Great, we now understand that. Great. So what are you going to achieve by Friday? What are you going to achieve by next Friday? You've got a week. What's 3 most important things you must do that's going to help you achieve target in the next week? In which case, tomorrow morning when you get up, what are you going to do tomorrow? What are you doing today that's going to get you one step closer to that target? If you know that, if you know how important that is, certainty steps into your mind instead of uncertainty, which often leads to some sort of depressive thoughts about the past results because you're not very clear about it. You've got no clarity about the past, and you're certainly not no clarity about the future because you're just making it all up in your head. But if we can look at the future and look at the past, and we can get an understanding of it, right or wrong, you're just going to get some data. You're going to create some certainty, and that's going to lead you to create some energy about your day. So you get up tomorrow morning and go, you know, hell with everything. I'm going to do this one thing that really matters tomorrow. And then you start getting a bit of results, and you get another results. Then you get excited. Then you win a new business. I mean, every business owner on the planet loves to win a deal, loves to win a new customer. That's just a great feeling. Oh, it's working. Everything's working. There's another one. There's another one. Okay, start stacking it. Start stacking it. So this whole budget and forecast from an accountant to you as a business owner, I want you to understand the budget and forecasting process, the teaching of how we get there is really not that critical right now. My goal is to get you to go, I want to do a budget and forecast and a target, and be actively engaged in it and realize the importance of it, because once you know why you've got to do it, you'll then figure out the how. And possibly, here's a clue, is you might figure out the how by starting off with writing it on big pieces of paper or whiteboards to get some clarity with some help, somebody from your team, to then transpose that information into some spreadsheets and get really ninja at some data levels, because you can pull data into CSV files and play with some spreadsheets. For most people, that's good enough, because the spreadsheets are powerful. You can run graphs and charts and all the things that you need out of it. To then later realize that the spreadsheet process is a little bit inefficient and is prone to mistakes, because that's what will happen eventually, is to then say, well, actually, now that I understand how it works properly at a spreadsheet level, I can now upgrade into a piece of software that can look after me in a much better way. That's the process that would go. Start manually, understand the principle, do it. And once you've got it in a process, we go, I'm enjoying this, make it a bit mechanized with some spreadsheets and really get them to work really well, because that's when you can fine tune and get things to operate properly. And then you can go full blown forecast and software later on. That's the route that I would do. But most importantly, you want to be able to tell somebody about these reports, whether that be your spouse or business partner. I go, I've got these reports here, let's have a conversation. Or have a conversation with your bookkeeper or your accountant. Go back to your accountant and go, accountant, here's my plan for next year. Here's my books for this year. Let's get the books done quickly so that I can verify that my plan is correct. Is there anything that you suggest in this plan going forward I should do, perhaps to save me tax, but I'm still going to actually make sure that I increase my profitability and stand by because I'm expecting to pay more tax? How do I manage this going forward? And they'll step in and help you. Or find a coach and a mentor. Either which way, you need some help perhaps to give you some clarity as you go forward. I hope that really helps. As I say, go watch the other videos in this little series. I think I've got one more to do now, which is that one up there. So I'll see you in the next video.